First of all, I want to thank Antonio and the organizing committee for inviting me down here. Antonio has been the perfect host, and it's a great pleasure to come visit your beautiful city and your beautiful country. I also want to apologize for my complete lack of Portuguese, so I will have to conduct this entire presentation in English. What I'd like to do this morning is sort of tell you the story of the Clean Energy Venture Group, of which I am one of the founders. I'd also like to leave you with some thoughts structurally about issues that we've confronted in terms of how to form a group, how to govern a group, how to grow the group, and also how to manage the group once we're in. 8 years ago, I was invited by my college to participate in a panel on energy and the environment at our 25th reunion. There were 4 of us on the panel, and afterwards, one of the other panel members, a classmate of mine who I had not known while I was an undergraduate, and I looked at each other and we said, look, we're middle-aged, we actually know something at this point in our lives, and we spend a lot of time advising other people how to invest in energy and the environment. Why don't we start up an investment group where we invest our own capital? And that was the birth of the Clean Energy Venture Group. We started with 4 members. Now, unlike a lot of angel groups that Catherine highlighted, we are very, very narrowly focused on renewable energy and clean technology. So the companies in which we invest are either creating renewable energy, conserving existing energy, or pursuing technologies that reduce pollution and enhance the environment. So very, very narrow industry focus. The 4 of us initially came together around the issue of climate change. And we felt that the marketplace was a terrific way to come up with solutions for climate change. And so we started investing companies. In the first 5 years of the group, we made 5 investments. Today, we own 18 companies. So the acceleration in the pace as our reputation has increased has been dramatic. In the past 2 years, we've looked at approximately 200 deals each year. We've made 5 or 6 investments each year, but those are only 3 of those in each year are new investments. Of the 18 investments we've made, 16 of them have had follow-on rounds. We've invested in every single follow-on round. Catherine used the term for exits, which includes companies that have gone out of business. I don't really consider that an exit, although it is. We've had one of our companies exit as a strategic sale, and one of our companies has failed. So we still have 16 ongoing companies. As the group developed a reputation, we began to attract new members. And we had to go through a process by which we decided on how the new members would be admitted. The first thing we decided is that we needed a 3/4 vote of the membership to admit a new member. This is a relatively high bar relative to other angel groups, but it is consistent with our very, very narrow industry focus. The criteria we have for new membership are that they have to be willing to invest on the order of $50,000 to $100,000 a year. Like the Pirate Code in the Pirates of the Caribbean, it's more of a guideline. But really importantly, they have to be able to bring managerial and experiential substance to the companies in which we invest. So one of our investment criteria is that for every company in which we invest, we take a board role, either a board seat or a board observer role. And we have to have people who are members of the group who are capable of and willing to take on those board roles. And in the US, in the wake of a variety of corporate scandals, becoming a board member of a company carries with it significant personal liability or potential personal liability. So having people with both the assets but also the skills and the willingness to take on a board role is critically important. Of our 18 companies, every single one of those deals has been syndicated. Now, it's interesting, we didn't know that until we were asked the question by the ACA. But we are not the only investor in any deal at any stage. We have been successful syndicating with 4 different types of groups. The vast majority of our syndications are with other angel groups. We have a natural affinity, we work the same way. We've syndicated about 1/4 of our deals with established venture capital funds. That's partially reflective of our backgrounds. A number of us have fairly good connections in the venture community, having been entrepreneurs in the past, having been supported by these firms. But it's also reflective of the fact that clean energy in many cases is going to require significant amounts of capital down the road, and we want to get the venture capitalists in early so that they're ready and prepared to invest in the follow-on rounds, which are going to exceed our capital availability. That collaboration piece, I can't understate the importance of it. It is both a source of incoming deals to us, but we now have a pretty good feel for our partners' experience and appetite for deals. And so the syndication process, which you described, Catherine, it has gotten a lot quicker, a lot shorter, and a lot more efficient as that trust builds up. We've invested about $15 million. The range is from $150,000 at the low end to one deal where we collectively invested $5 million. So we're on the high end of that. That company is very much an exception. It was a company that was started by one of our members, and a significant portion of that $5 million was his personal capital. He has now become an affiliate of the fund, and I'll get to that in a second, and he's running the company full time. We do track our returns. Now, tracking returns, we're very much similar to Catherine's group in the sense that we vote with our checks. So while we have 14 members in the group, not all 14 invest in every deal. Each person makes their own decision on a deal-by-deal basis. In order to call something a CEVG deal, we require that at least that the diligence be done by CEVG as a group, and that at least 2 members invest in the deal. So that's what we define as a CVG deal. I don't believe we have any deals where it's only been 2. I think the minimum is 4 people who have invested in any deal. So I was talking about returns. Tracking returns when you've got individual investors in each deal over various rounds, over various periods of times, requires spreadsheet skills that are beyond me. But we have one of our members who's really quite good at it. And the way we value the rounds is we hold the value of the previous round until there is substantial, compelling, and material reason to change it. That usually means a follow-on round or a term sheet for a follow-on round that for whatever reason we have rejected. So for example, we have received term sheets for follow-on rounds that we did not think fairly captured the value of the company. We will raise the value of the company to the value of that term sheet, but not to what we think it is worth. Using those figures, we have an IRR from inception of about 17%. And that's over 8 years in which the venture capital industry, as Catherine pointed out, has had on average a negative 3% return. So today we are 14 members, 11 full members, and 3 affiliates. The affiliate membership is a category for people who have been full members of the group, but who have left the group to either found a fund, 1 person, or to run one of our portfolio companies, that's 2 people. So they are not as, we don't want them as fully engaged because they're running the company. So we have put them into a different membership category. They get all the emails, they get all the deal flow, but we don't expect them to participate as actively as they have in the past. I just want to make a couple notes on some things that Catherine said. We, from a deal structure standpoint, we do about half of our deals in a convertible note structure. Now, this is a bit technical, but I think it's important. I personally don't like convertible notes because discounts to the next round don't compound. My personal hurdle rate for my portfolio of angel deals is 30% IRR. But I know that some of them are going to fail. Therefore, my expected return from each deal is 50% per annum. And it's impossible to get that with a 20% discount on a convertible note. However, what we do with virtually every convertible note is we put a cap on the conversion. So in other words, what that means is if you lend the company $1 million on a convertible basis because you don't want to have an argument about valuation right at the very beginning, we'll put a cap, sometimes $5 million on the conversion. So our note converts at 20% of that maximum valuation. So if the company has a $3 million cap, but its next round it's valued at $5 million, our note converts at 20% of $3 million, which ultimately ends up to be about 50% of $5 million, and that's the way we handle the convertible note structure. As I mentioned, we've participated in every single follow-on round, and as a rule of thumb, we think that in the first time we invest in a company, if that investment's $250,000, we ask all of our members to mentally reserve 2 times that amount for future rounds. So if I'm investing $250,000, I don't invest $250,000. If I invest $50,000 in a round, I'm reserving in the future another $100,000 of capital, and I have to put that into my own personal financial model to make sure that I have the capacity to fund that company down the road. I want to just make another comment on Anna's question about accredited investors. I actually think the U.S. standards for accredited investors are too low. If you have $1 million in net worth and you're investing $50,000 a year in angel investing, you're quickly going to have that be a significant portion of your net worth. I think the accredited investor requirements of the SEC are extremely important for starting the conversation with investors about, can you afford to lose this money? It creates an explicit opportunity to have that conversation. And I think it's a very, very important conversation. My wife and I practice a very rigorous asset allocation model with our personal wealth, and we allocate 5% to angel investments, so less than what the average angel investor is. And that includes future cash flows. So it's I think understanding risk from the perspective of your future angel members is a critically important factor. I'm going to move from CEVG and talk a little bit about what I think some of the structural considerations are with respect to starting an angel group. So, and I'll divide that into 3 categories. 1 is issues of membership, 2 is issues of engagement, and 3 is issues of management and governance. So number 1, issues of membership. Do you want to be a large or small group? And I think and by the way, I don't think there's a right answer to any of these questions, but I think that they're very, very important to consider. Small groups create an incredibly positive dynamic within the group. People get to know each other very well. It very much becomes a team. As groups get large, I think a couple of things happen. You get much more capital to the table, which is a very good thing in the angel world. You get much more diverse experience. You get many more people to share the work of due diligence and taking the lead on a deal. But you also lose that interpersonal connection that happens with a small, tight group. And you may get what I call free rider problems, where if you have a group of 50 people, there are 10 people who do 80% of the work and 40 people are essentially subsidized by the labor of others. And that can create some challenges, which I think a number of groups have dealt with really quite effectively. A second criterion for membership is the investment amount. Catherine laid out hers. We look at $50,000 to $100,000 a year. As we've been around now for 8 years, and some of us are approaching our cap for angel investments, I think it's worth thinking about what the total cap on an investor in a group might be. So if somebody says, yeah, I'm willing to do $50,000 a year, but I have a $250,000 total cap in the investments I want to put in that space, if you're reserving 2x the capital that you invest in any deal, you're really only investing in 2, maybe 3 deals under that situation. And you may want to ask the question, is that person going to be long enough in the group to participate at that level? I also think that skills mix and the quality of people and the breadth of skills that you have. Doing angel investing requires a lot of work that venture capital firms pay a lot of money for people to do. You need people who are very good at due diligence, who are very good at saying no. You're saying no a lot more often than you're saying yes. Who are good strategic executives who have gotten that experience, who can understand the broad environment. I'd say half of our companies have executed pivots at some point where the business model was headed here. They realized that didn't work and they needed to pivot and go there. And having people in the angel group who understand the value of pivots is enormously important. I also think it's important to have a cost of membership that is high enough that you prevent people from just dabbling. You really, in my opinion, you really want people in the angel groups who are going to invest. Now, there may be a time while they get comfortable with processes where they're not going to invest, but I think making the membership cost high enough so that you're not getting people who are just interested in coming here, companies present, is an important factor. So, issues of engagement, active or passive. There's a number of angel groups that are essentially passive investors, where they're presented deals, they do some due diligence, they write a check, and they essentially get investor updates, but they're not active in the involvement of the company. There's a number of other angel groups like us, and I think like you all, where a board role is extremely important. We will not take on a new investment where we don't have a board role. We believe that with our narrow focus, we have a lot of value to add to the entrepreneurs. And so without that board role, we don't have an explicit way of adding it. In addition to that, in a number of cases, we have worked with companies for over a year prior to investing. In other words, they have a technology that we think has real potential, but the business model's not right yet, the technology's not there yet, it's not an investable deal. It's not something that we can sell to others and that we can see a path to exit on. And so we'll work with that company on a very active basis up until the time that we think it's investable. Now, we have 3 or 4 companies in our portfolio that we've done that with. We've probably done it with 10 companies, and we just never got those other 6 to the point where we think that they were investable. That's a frustrating process. It requires a lot of time and energy, but ultimately we think it makes for better deals. Another question is geographic focus. Again, as we are an activist investor with our companies, we are limited to being essentially a regional angel group. That's not a criterion. We've invested with a couple of companies that are outside of our region, but those have been exceptional circumstances where it's worth it to usually one of us to get on a plane and go to board meetings and go visit with the company. But I think that's another decision. Do you want to be regional or do you want to be more broadly based? Syndication is a great way to develop relationships with other groups in other regions where you form those bonds of trust, and it enables you to break out of that regional focus. And then the last criterion, I think, in terms of issues of engagement is focus or not. Most angel groups don't have the tight industry focus that we do. There's a number of groups in the US that are very tightly focused on healthcare. I really don't, and I think there's a number that are loosely focused on internet and mobile applications, but I don't really know of too much other narrow focus. I think there are advantages to focus, which is that you bring very, very tight levels of expertise. The disadvantage is that we see 200 deals a year in clean tech. There's probably 5 times that many deals in the Boston area that we just don't look at because we've made a decision to focus. So I think that there's a breadth versus depth issue there. Finally, I just want to touch on some issues of management and governance. Do you want to be a professionally managed organization? There's a very large angel organization in Boston called Common Angels. They have 2 full-time paid staff people who are compensated both in terms of salary but also in terms of participation in the deals. That's an expensive model. It's also a very, very effective model, but it requires a membership and a membership structure that is really quite sharply different from the vast majority of angel groups, which are essentially volunteer run. Again, how do you want to make decisions around deals? Is it a consensus process? Is it a vote with your checkbook process? Is it a majority vote off of pledged funds? I think those are critical determinants early in your history. Again, I don't think there's a right or wrong answer, but thinking through how you want to make decisions about what investments to make before you start making the investments is a very, very important issue. Related to that are decisions about membership. As I said, we require a 3/4 vote of membership to admit a new member. That's a fairly high bar. Some angel groups simply require the payment of dues. Some angel groups it's sort of all over the map. But thinking through that process is very important. And the last thing I'll comment on is decision making is exit. First of all, exits are great. They're really fun. But oftentimes you'll have significant disagreement within the angel group as to whether now is the right time to exit. And whether or not holding on to that equity investment for 4 more years might produce a substantially higher return. And so thinking through upfront how you want to make decisions about exit is critically important, because that's really where conflict can rear its head. Our process is largely driven by the lead person on the deal. And again, the way we work is the lead person on the deal is the person who takes the board role. And that person, because he or she has better information about the company, will make a recommendation to the group. Now, the group is smaller now because it's only people who have invested in that company, as to whether an exit is the right time. Then once that person has made that recommendation, and they have to be prepared to back that recommendation up, then individual members can make their own decisions. That's the way we've chosen to do it. But again, I think that there are other ways of doing it. And with that, I'll be happy to take any questions you have, and also let my colleagues on the panel comment.
Bom, nosso grupo é grupo bastante recente. Nós fundamos o grupo no início do ano, então nós não temos nem um ano de experiência ainda. A gente tem aproximadamente, como estava conversando com o Antônio, uns cinco associados bastante ativos no grupo. O grupo tem hoje 10 associados como um todo, mas assim, no dia a dia do grupo mesmo, aproximadamente 50% do grupo é o Vitória, investidores anjos, tá? Se dedicam mais. E ouvindo o que ele estava falando, as questões que ele coloca são praticamente as mesmas que nós estamos enfrentando, né? Eu acho que o período que nós temos de vida do grupo foi um aprendizado até agora muito grande, e todas essas questões a gente tem visto na prática lá, né? Então, desde as questões relacionadas à admissão de sócios, por exemplo, né? Como que fazer, como proceder, como filtrar, né? E principalmente as questões relacionadas a engagement, né? A participação no grupo, porque nós estamos num momento ainda de nascimento do grupo, de formatação do grupo. Então, várias questões foram colocadas, como que nós vamos formalizar os nossos processos, quer dizer, até onde o grupo vai, o grupo vai participar, de que forma nas análises, né? Então, tudo isso está em processo de formação, e isso exige muito tempo, né? É muita energia para isso, não é um negócio fácil de fazer, e um dos pontos de dificuldade que nós encontramos até agora foi esse tipo de situação, conseguir com que todos participassem, fossem ativos e ajudassem a formatar isso, né? Uma situação que nós percebemos, né, à medida que esse negócio foi andando na nossa região, é que o nosso ecossistema lá ainda é muito frágil, né? Nós não temos um ecossistema robusto nessa área de inovação e investimento. Então, de 4 meses aproximadamente para cá, nós começamos nós decidimos dentro do grupo que a gente precisava fazer algumas ações que não estavam inicialmente previstas para esse primeiro momento, e a gente começou algumas ações na área de educação, né? Nós incentivamos e promovemos, estamos fazendo isso ainda, cursos, por exemplo, curso de Canvas, coisas assim. Nós estamos numa iniciativa junto com uma universidade na área federal, para tentar fundar e tentar montar uma aceleradora, né? Que o problema que nós tivemos nos primeiros, assim, a maioria das oportunidades que chegaram para a gente nesse momento, a gente tinha dificuldade, assim, eram ideias até interessantes, mas num nível de amadurecimento, num nível de uma situação que era difícil de compor uma situação de investimento, né? Então, assim, foram vários desafios e todos esses desafios, desafios que exigiam muita energia para a gente tocar para frente, né? Então, assim, nós estamos nesse momento, demos uma certa direção de tentar promover essas ações mais de fundação, assim, mais de base, para poder melhorar o nível de qualidade dos projetos que estão chegando para a gente, né? Até o momento nós estamos investindo, quer dizer, assim, o processo de investimento não conseguimos fazer da forma ideal ainda, né? Nós temos 2 empreendimentos que receberam investimento de membros do grupo. Um investimento que eu estou participando e outro investimento que o Diogo, que está presente, também está participando, né? Mas, assim, não são investimentos que nós conseguimos que fosse feito ainda da forma ideal que a gente gostaria, né? Foram investimentos que chegaram até a gente, nós levamos aos membros do grupo e aconteceu, por exemplo, num investimento eu entrei, no outro aconteceu de outra forma. Então, assim, eu acho que tem muita coisa, a gente está numa fase muito inicial, tem muita coisa para a gente fazer, né, no nosso grupo. E é uma experiência, assim, de certa forma, mais difícil que a gente estava imaginando. Assim, você conseguir estruturar um grupo de investidores antes, principalmente na região como nós estamos, que é uma região que ainda não tem um ecossistema, não tem uma cultura de investimento como a gente pode encontrar em outras regiões, não é uma coisa tão fácil como a gente pode imaginar.
Okay. Hi everyone, good morning. First of all, very thanks to Antonio for the invitation. Our investor club is Angel Investor Club from Buenos Aires, Argentina. For us, it's a pleasure and an honor to be here to participate in this summit. A lot of experiences and best practices to share and to learn with too. Second, I have to apologize because we prepared a short, briefly presentation in English, but the trip from Buenos Aires to here was a little bit complicated yesterday. Rio is todo lotado. It's very difficult to stay. But anyway, by the end of the week, the presentation will be available for everyone who wants to share and to learn to read this presentation. Third, I will ask for permission as a angel investor, Latin American Angel Investors Club, to speak in Spanish because in a kind with we want to strengthen the idea of the needs, the kind of these business angels clubs need in the region. Anyway, we are trying to make associations and links with other investor clubs in all around the world. But I will briefly explain what we are doing over there in Buenos Aires. El Business Angel Club of the IAE es un club de inversores ángeles que dio origen allá back en el año 2005. Básicamente somos ex alumnos de una escuela de negocios que es la IAE Business School de Buenos Aires, una escuela de negocios que tiene acuerdos con Harvard y con la IES de Navarra, España, y fundamentalmente nació como una necesidad de canalizar ideas y capitalizar espíritu emprendedor, un grado de espíritu emprendedor alto que hay en la región, particularmente en Argentina. A partir de allí dimos origen al club, que hoy cuenta con 100 miembros, 40 que actúan de manera más activa, y como tal, por ser de un tamaño reducido y de corta experiencia, estamos aprendiendo permanentemente. Y nos encontramos con varios problemas que estuvieron mencionando y con algunas prácticas que fuimos incorporando para sacar el mejor rédito y poder lograr los mejores resultados de todas las ideas que se van presentando. Voy a dividir la presentación, si se quiere, en dos grandes temas. Por un lado, es nuestra forma de operar y por otro lado, la problemática con la que nos encontramos habitualmente, internamente y con los emprendedores. Como le decía, somos un grupo de 100 miembros, 40 que actuamos de una manera en forma más regular. Cuando digo esto me refiero a la mecánica de operación, ya que tenemos establecido unas reuniones de preselección, de pre-screening de las ideas, y de ese pre-screening salen las ideas que mensualmente se presentan a los miembros del club. Esto tiene ventajas y desventajas. Las ventajas es que este proceso es bastante o muy aceitado, muy acelerado. Una ventaja que es para los inversores y para los emprendedores también. Y una de las desventajas que tiene este perfil de club es, al ser un grupo limitado a estas, por ahora, 100 personas, es que los fondos también son limitados. Como así también la escala no es lo suficientemente grande como para generar lo que alguna vez pensábamos en líneas temáticas. Con esto me refiero a poder tener alguna especialización por industria que genere mayor atractividad a nuevos inversores y también a emprendedores. Este último punto vamos tratando de salvarlo digamos, logrando o buscando acuerdos y asociaciones con otros grupos inversores, otros clubes, ángeles, que permiten esa mayor escala y despertar ese nuevo interés sobre los emprendedores que se van acercando. Con respecto a las problemáticas que a veces nos encontramos con los emprendedores fundamentalmente que se presentan, y en parte lo mencionabas, tiene que ver con emprendedores que se acercan con planes no muy detallados, no muy profesionalmente acabados. En parte ese es el valor agregado que desde el club se puede agregar. Pero por otro lado también uno se encuentra con esta expectativa del emprendedor en cuanto a la evaluación de su proyecto. Creo que las Convertible Notes es una gran solución en ese sentido, de moderar expectativas, de poder compartir el riesgo en ambas partes. Y ya particularmente desde un año para atrás a esta fecha hemos utilizado más esta metodología que permitió acuerdos más felices entre inversores y emprendedores. También tenemos como práctica 2 personas full time y rentadas para trabajar en el club. Creemos que sí es una práctica muy sana. Profesionaliza la operación, focaliza y potencia mucho. Y por otro lado también hace ese trabajo de seguimiento a los miembros para que sea cada vez mayor la proporción de miembros activos que participen en los due diligence y análisis de las inversiones. Por otro lado, también estamos muy convencidos de que es tremendamente importante el involucramiento de los miembros, no solamente en el due diligence, sino también en la operación una vez que se ha hecho la inversión. Esto a veces es más permisible por parte de los emprendedores, a veces no tanto, pero nuestra idea de origen es tenerlo en presente y poder proponerlo como un valor agregado más allá del dinero. También tenemos una metodología de membresía, un fee mensual que se paga, y esto creemos que también demuestra compromiso, obliga a mostrar compromiso a los miembros del club. Y con respecto a los tickets de inversión, son variables, pero generalmente rondan entre los $50.000 y $200.000. Hemos tenido el promedio, el promedio da más cerca de los $50.000, pero bueno, es el tipo de tickets que también entendemos hace más viable la operación. Con respecto al tipo de proyectos en los que venimos invirtiendo, hay más de 20 proyectos invertidos. Fundamentalmente fueron, y particularmente en los últimos dos años, la aparición y la explosión de todos los que son proyectos de industria de Internet, y anteriormente temas de biotecnología y alguna que otra compañía brick and mortar. Pero en general, y especialmente desde el año 2009-2010, una mayor proporción de proyectos con base a Internet. Hasta ahí, fundamentalmente, para compartir la forma de operar. Just for the ending, and we really believe that it's very important and very useful to keep this kind of networking around the globe, not only in the region, in Latin America region. So we will be always promptly to be here, to be presented, and to be ready to help in every kind of way we can. So again, thank you, Antonio, very much for the invitation.
Hello. Bye, Ernesto. As I told you already, I started as an angel investor about 10 years ago, and when I decided to go into this business, I prepared myself first. I studied and read a lot of books about. I attended the Venture Capital Institute in Atlanta. It's a very nice start. And I did my first investment in 2004. I very soon found out that I needed to professionalize. And today, it's a full-time job for me, and I have one person working with me. He takes care of all the financial part of financial and societary part of the deals. Our company is very closely. The fellow which works with me on the financial and accounting part, and making sure that the entrepreneurs doesn't forget to pay the taxes, and mainly the taxes, because this can turn into a big problem. And I do coaching in strategy and technology when possible. The kind of deals I look for is not, it's a very broad business. I have electronic games, software, internet. I have energy, and I have recycling. The last deal, I signed the investment agreement last week on October 31st, is a recycling company. All of them very early stage, almost co-founder, and geographically bounded. I don't drive more than 2 hours from my base, and I have, in fact, 2 bases in São Paulo, where my company is located, and in Florianopolis, which is a great place for angel investment, mainly because it's a great place for water sports, which I like. But also Florianopolis is a very active active region. They have a great incubator there. It's a 6-story high building, which today have about 45 to 50 small companies. They are building a second one because there are more companies to come, and it's a great place for deal flow. I forgot to say that my group is myself only. Okay. But I do co-investment also. The deal which I closed now is a co-investment with a seed fund from the FINEP program. And I'm now negotiating another deal also, which is also in co-investment with the same seed fund. I did 6 investments so far. One of them failed. And it's interesting to note, it didn't fail because of market problems, didn't fail because of technology, nor because of product or something like that. They had a great product, and they were doing well, nice revenues in their second year, but success was too much for the entrepreneurs, and this is a very important lesson I learned. They started to fight, and they broke the company because of their fight, and there was nothing I could do about. I always take a seat in the board, and I make this guaranteed by a shareholders agreement. I take preferably from 20 to 40% in equity, voting equity. I have one deal with convertibles also, but I don't like it very much. And no, I guess that's it.
Well, Gavea Angels, we have 2 phases in our story. A lot of you know the story, but I just so you understand a little bit where you're coming from. Now, we've just celebrated the 10th anniversary. We founded in December 2002. The first investment was made in 2004. So in the first, what you call the first phase of Gavea Angels, from 2004 to about mid-2008, there were 4 investments made. Of those 4 investments, 1 has closed down. 1 was 2, and 2 are still working. They're still developing, and 1 was left behind. So that's what we call the first phase. The second phase, which 2008 with the crisis, Gavea Angels kind of slowed down, and then for 2010 you got a new generation like Paulo and other colleagues who are here now. I think there are probably 15 of us here out of the 30 members. We started a new phase. And from 2010, with Ernesto Weber, who took the challenge, of let's say reigniting Gavea Angels, we went from 4 members to 30, almost 32 today. So what are the challenges we have facing today? We're still facing a membership challenge. We have a membership committee which is led by Ernesto Weber. We do a screening of our members, of the propositions for members. The membership committee will then make a recommendation to the group, and then the group is going to vote on the membership. But usually, once the members committee recommends someone who will be approved, to become a member of Gavea Angels. The heavy load committee, which is led by Paulo Tavares, is what you call the operations committee that does all the screening. You receive most of our proposals to our website, but we receive varies between probably 80 and 150 proposals per cycle. We have 5 forums per year, so there's a very heavy load, and that's where it takes most of the volunteer work. Just to remind we are our volunteer group. We have 1 part-time staff, Larissa Harrigan, who some of you may have contacted, She's our executive secretary. She works 20 hours a week for us. There she is. And so we have, but most of the brunt of the work is now is done by our associates. So we are really volunteering. That requires a lot of time and a lot of commitment, a lot of engagement from our members. In terms of our recent development from 2010 up to now, we have made 5 investments. Of those 5 investments, one we left already. Now we, after 6 months, I have to know how to leave. It's very important. Me and Paulo were involved in that one. We're still trying to recover some of the money. He recovered some of it, still struggling, suing the guy and everything, but that's part of the deal. The other 4 investments, the first one we did in the second phase, the online video education company called Descomplica. Now I'm proud to announce that we just today we put in the dots on the I's. Now I think it's safe to announce we just closed in a Series A investment with 3 New York and California funds and a group of super angels from Brazil. So it's a landmark for us in terms of evolving our deals. We invested within our geographical region, within 200 kilometers of Rio. You don't want to travel, you don't want to take planes. So when an opportunity came for a deal in São Paulo, we made the first investment last May with Argotec, with Mike Einstein and Pedro Weingartner. That was the first syndicated investment that we are able to develop in this company, Já Comparou. So it was a new experience for us. It's working quite well. And we have 2 other investments that have been made by groups of between 3 and 4 and 6 people. Let's say the average investment is about $150,000 to $200,000, and you usually take between 30 and 40% of the company. And I guess we also take a seat, we not only take a seat in the board, but you want to run the board, even if you have a minority shareholder, but you want to have the presence of the board. So that's part of our philosophy, because you think it's very important for us to give a strategic orientation for the company at this stage of growth. I think talking about challenges, I think the major challenge we face today is the issue of valuation. I mean, we also have the same problem that Pedro and others notice now in terms of the entrepreneurs. They come to us not prepared. No, they don't really have a business plan. It takes a lot of time, to develop a business plan with an experienced entrepreneur. So there's a question of capacity building for the entrepreneurs. That problem is in a way being solved by the rise of accelerators, but accelerators also create another problem, which is the valuation problem. Accelerators are taking a lot of equity and pushing valuations very, very far up, So a lot of the deals that come from accelerators to Gavea Angels, they come with a very high valuation. They come with a very high equity taken already. So it makes it impossible to make an investment, either because the valuation is too high or because an accelerator have taken like 20, 30%, so there's no room for making a 30, 40% investment, and it's still allowing the entrepreneur to be a majoritarian and be able to run and be interested in running the business. So that's one challenge that you see nowadays. I think on the positive note, I think the opportunity for angel investing in Brazil nowadays is the fact that the interest rates have come down. So a lot of people, wealthy people, all the Brazilian millionaires, they're looking at other opportunities to invest. And I think in Argentina is the similar. Argentina is even more complicated, but I mean, I think there's also an interest in investing in angel investing. So there's a lot more attraction, a lot more people attracted to angel investing. So I think it's a good moment to. Although it's a very challenging, as we heard, to start and develop our business angel group, and to really develop a business out of it, I think it's a great moment, it's a great opportunity to do that. And I think just to emphasize that I think it's also a great opportunity for us to start doing more syndicated investment. That's why we have here Eric, who just launched a seed fund, Rodrigo Esteves, who just came in. Sorry, I sent him the wrong time for the panel. That's why he was late, because of me, not because of him. Anyway, he runs, he's part of a Confrapar, which is one of the leading seed investment funds in Brazil, and he runs in the Rio fund Nascente, which is a recent seed fund, which is right now is the only local seed fund in Rio de Janeiro. So we need more seed funds throughout Brazil and throughout Latin America. So we have someone to co-invest, besides our colleagues, from within Rio and from other parts of Brazil. So that's what I can tell about Gavea, and then you can come back and answer a few other questions afterwards, and I'll pass along to Rodrigo.